Hello again, everyone. My name is Alicia. I'm the host of the Invest in Africa webinar. The goal of the webinar is really to highlight some of the investment practitioners that are investing in African early stage companies on the continent. And in doing so, creating more information and awareness about the how that folks are investing in order to, I think, with the ultimate goal of, getting and facilitating more capital to these companies. So very excited to have today with me Idris Bello from Loftyinc Capital Management. I think we'll talk about the fund. I think what's exciting about the work that Idris has been doing is that that essentially they've built an entire ecosystem around their funds. So whether or not they are directly investing from some of these other platforms, they've really kind of created this entire ecosystem to support the entrepreneurial ecosystem in Nigeria. So really excited to dive into that, really excited to dive into the exit that you all had from Flutterwave, as well as a couple of others from your portfolio, and then to talk about kind of where the fund is headed going into the future. So I think with that, I will ask Idris just, maybe if you can share a quick intro about yourself, and then, transition into a little bit around how you got into venture and what kind of prompted the creation of Loftyinc generally before we get to the fund.
Yeah, thank you very much. My name is Idris Bello. Sound check. We good? Sound wise?
I can hear you.
Are we good sound wise?
Yep.
Cool. So thank you. So thank you very much, Alicia, for getting me to do this. I know you've been trying to drag me to do this for a few months with the support of the rest of my team, Marsha, Michael, and Lydia. But glad we're actually getting to do this. So my name is Idris Bello, Nigerian American. I grew up in Nigeria. Went to university at Obafemi Awolowo University, Ife, in Nigeria. Studied computer engineering. And then worked for a while, started my career at Procter & Gamble, P&G, across West Africa in the early 2000s, right? So more warehouse, supply chain, warehouse management, logistics, strategic planning. Then moved to the US, where I got my master's in computer science and data mining. Again, these were the early days of data mining and artificial intelligence, looking very differently from what you have today. Well, then that led me to the oil and gas industry, where I worked across Chevron, ExxonMobil, and BP for close to a decade before venturing into the entrepreneurship space myself, and of course along the line becoming an investor and a venture builder and supporter. So I think I've been at this new phase of my life for going on 11 years now. So I think I really started around 2009, 2010, when I came up with the term Afropreneur, which is actually a trademarked term now, so which I trademarked, but which actually spoke to my dream of leveraging entrepreneurship to rewrite the story of the African continent and to support and find similarly minded individuals who were willing to do this and work together in a collaborative fashion. And I'm grateful that 10 years plus later, where we are. But again, it's still the early days yet in the journey, but glad to have come this far.
So it sounds like it was through kind of the graduate work that you did that was really kind of what was the entry point into some of the early stage investing. I guess, how did it go from kind of doing some research to then becoming, actively kind of creating this entity that is Loftyinc?
Yeah, so I think 2009, 2010 were pivotal years in my journey. For me individually, but also for other members of the Loftyinc team, because a couple of things happened around that point in time. So if you look at that, I will get to our fund later. So, but some of the key members of the Loftyinc family, Marsha, Wolf, and Michael, met in 2009 in Dallas. Where Marsha had previously been involved with Africa, and Michael had all these dreams about entrepreneurship in Africa, but there he was stuck in Texas, right? 2010, and so that was really what led to the Loftyinc starting. But around that same time, I visited Lagos after being away for a while for something called the Nigerian Leadership Initiative, Future Leaders Class. And while I was, so at that point in time, I was at Rice University getting my MBA. So it was my first year of my MBA. And while I had left, I had finished, so I was being sponsored by Chevron to go to get my MBA, and the goal was, move up the managerial ladder. But then I got very excited and interested in entrepreneurship during the MBA program because I had this professor, Mark Epstein, and what he was doing was he was building sustainable business models to support the bioengineering department that was building low-cost health technologies, right? Low-cost baby incubators, low-cost, different diagnostic tools. And rather than just giving them as grants, as aid, which had not worked in a sustainable version, his idea was he could actually build small businesses in those countries around these technologies. And so he was working in Rwanda and Malawi at that point in time. And so he brought me in to help scale this to Nigeria, right? And that was really one of my first entrepreneurship and startup idea opportunities. So while I was in Lagos, I spoke about this. I got interviewed by a newspaper. I spoke about what I was doing in Houston around entrepreneurship, and also spoke about how entrepreneurship could actually become the bedrock for the changes we wanted on the continent. Fast forward a few months later, another friend of ours, who's also a partner now, Dami Agbola, Dami saw that newspaper article, and then he forwarded it to Michael. Then he also forwarded an essay for Michael. Michael had written an essay for the World Bank on entrepreneurship being a solution to Africa's challenges. So he also forwarded that to me. And we found out that we had similar ideas, right? It's expressed in different ways. And the idea was, why do this differently? Why don't we meet up? And we're both all in Texas. Why don't we meet up and speak through this over dinner? And that's what happened. And we met up and said, okay, this sounds good. At the core of what we're trying to do was, how do we turn lofty ideas that we know people have? How do we turn it into lofty companies, lofty corporations? And that's where the name comes from, Loftyinc, right? So lofty ideas to lofty corporation. So how do you execute on those ideas and make them incorporated and turn them to corporations, right? And that was really the goal. How do you turn lofty ideas to lofty corporations and create corporations that then create high impact jobs for the African continent? Mm-hmm. And so we had that vision. We didn't have a clear path to what we're going to do, right? But we had that clear vision of we were going to find a way of supporting Africans who wanted to create high impact jobs by creating companies on the continent and in the diaspora. Now, how do we get there? We're not sure. And we also shared that idea with Marsha Wolf and a few other people there, and the folks at the World Bank and folks at IFC. And there was, where do we get started from? And one of the first things we did was we looked at a couple of models they were going on then. So there was YC was there. There was in IOB in Kenya. There was nothing yet in Nigeria, but there was IOB in Kenya. Mm-hmm. And we said, okay, fine. Maybe the way to go is to create a space where serendipity can occur, where you can have people with ideas come together, and who knows what would happen. And the idea was, okay, fine, there we are, we're in Houston, what do we do? Then Michael had an old friend of his, Leo Detaya, who he had gone to school with, who was in Lagos. So, okay, fine. We're not ready to leave our jobs yet. We're all in the oil and gas industry. Let's work with Wally and people on the ground in Nigeria. Let's set something up. And the question was, what do we name this? And we said, okay, you know what? What we're doing is not just innovation, which identifies the primacy of the individual. What we're doing is collaborative innovation. We are innovating together, and we came up with Innovation Hub. And the idea was we took out the I from innovation, replaced it with the we, because we realized that the problems that the continent was facing and the issues we were going to tackle were not things that needed just the individual, right? As an African proverb says, you want to go fast, you go alone. You want to go far, you go with others, right? And that was the idea. Let us find like minds we can collaborate with, and we innovate with. And that was how we started with our first key project. Then was Innovation Hub. And it was simply a space, it was early 2010, where young people in Lagos could come to. We provide power to them, internet access, advisory, and our own small network of entrepreneurs and corporate folks. And that was really where it started. We didn't have all these great fancy dreams then. But you fast forward about a year later, we're doing this. And feel free to interrupt me at any point in time, right?
Well, I was just going to say, could you share with us? So this is around 2011, 2012 when
this is late 2010, early 2011.
Okay. So very, very early days.
Yeah. So that very early, exactly. And I still remember when we said we're So we spoke to a couple of folks trying to get corporate support in Nigeria back then for the Innovation Hub. And they asked us what we're trying to do. And it was an incubator. And the concept of incubator they had was chicken incubator, poultry incubator. So they said people trying to hatch chickens or something like that. How strange these things were back then. Again, 10 years later, it looks like it's everywhere. But again, there were very, very few hubs on the continent back then. But that was really what we started doing. And very funny stories. And I will tell some of those stories I've never shared here, which I'm writing a book eventually. And that's some of the things in the book. So very early on, one of the things we did was this. Okay, fine. We have Wally on the ground. We have folks on the ground. How do we run this? Where do we get the expertise to do this? And so Marsha had moved to California then, and she was a mentor to the school called MIIS in California, Montreal Institute of International Studies. And they had this MBA program. And so the idea was, why don't we work with them around a frontier market scouts program, where their MBA and MPA students actually go spend 3 to 6 months in emerging markets. On one hand, they are bringing a lot of expertise from their own world, but they're also learning how entrepreneurship is being done beyond the theory in these new places, right? And so January 2011, Marsha invited us over, myself, Michael, and Dami, to teach for a week at this school in California, in Carmel by the Sea, in California. And so again, very early this was probably a few months into the innovation. All we had was structure and maybe 1 or 2 people on the ground. So I think we went there and we so much sold our vision to the students that before we left the class, they had actually bought one-way tickets to Lagos. And that was scary because we didn't have anything on the ground, really, right? So these were young, impressionable American MBA students who were willing to jump on the plane. And we're like, relax, guys. We're just setting up. We don't even have where you're going to stay. We don't have. Well, again, it was crazy because then suddenly in a few weeks' time, a few weeks after that, we had 4 MBA students on the plane arriving in Lagos. We have to figure out the housing. For those who know Lagos very well, we were operating in Agege, and Agege is not where you would want to put someone from the US, right? Power was going out. We're figuring it out as you go. We're setting everything up. I was crazy. It was, again, very, very funny early days. But it actually forced us, it stretched us, right? It forced us to move faster than we ever wanted to move. So suddenly you had these 4 students who were spending so much energy, and then we were keeping them in Agege. There was this small house in Agege. Power was going out. We had to find entrepreneurs to come to the program. We had to create syllabuses. We had to create processes, and we had to deal with security. And typical young people, they also want to go partying at night. And we're like, it's not even safe for Nigerians enough, right? So again, it was quite very tough early days, and we had no funding. So what was happening was we in the US were taking out of our monthly salaries to keep this going in Nigeria. Oh, wow. But we got a lot of early support. Yes. So it was self-funded, right? So, and but we got support from people like the Faith Foundation, Lagos Business School, and a couple of people at Wimby's. I think what's her name now? So again, and that was before Washika would now end with Wimby. So that was really how we started with Innovation Hub. Very rough early days. And then after that, what then happened was we had another partnership with MIT, where MIT had this program where they were sending computer science students in summer to Nigeria. And we provided the business perspective. And we did this at the University of Ibadan in 2011, 2012. And that was really where our first cohort of startups came out from. Because you now had, again, everybody's, the developer ecosystem is very well developed in Nigeria now, but 2011 it wasn't, right? And so it's still very strange. I had these computer science students coming from MIT, and over a summer period, actually teach people how to code. Some of them were even computer science graduates or students, but didn't know how to code. But then we now provided a business perspective, and then spun out about 3 or 4 of our early companies from this space. So that was actually in late 2011, early 2012. But again, at this point in time, we still didn't have nowhere how we're going to approach this. We're still, doing this, part-time. Wally was on the ground, and this was going on. But around that same time, 2012, as we started having those companies, the question was, how do you fund them, right? So they have these ideas now. What's next, right? So innovation is existing, is helping them. Where do they find the money to go to market and to prove their MVP? And so we thought we had a few uncles and folks in the corporate sector in Nigeria, and we spoke to them. and said, okay, we have this startup, what's the startup? It's this thing, you have an idea, you're trying to build this, would you fund them? And the answer was largely no. And they basically said they only understood real estate investments, and they also understood oil and gas investments, not this tech thing.
Right.
So then we came back to the valley, right? And Marsha and there was this lady, Salipera, and a couple of black caucuses in the valley put together a couple of dinners for us where we were pitching what we're doing with Innovation Hub and our startups and how we needed funding. And they were like, yes, we understand the tech thing, but not the Africa thing. All right. So we're not putting money in Nigeria and this tech stuff. So the next thing was, what do you do? So we read up on a couple of things, and there was this concept of there's something called an angel network where you can set up. Right. And so what we then did was we set up something which we call LAN, Loftyinc Angel Network, LAN. Mm-hmm. And the idea was to build an angel network that would put some money in there. But then someone introduced also the IFC back in 2012, and we pitched this idea to them. And they said, why didn't you make it more inclusive? And so we actually changed the name from Loftyinc Angel Network to Lagos Angel Network, which everybody knows today. So that was actually the genesis of what's now called the Lagos Angel Network. And then with people like Tommy Davis and a few of other people, so that brought that, and that was primarily the first angel network that Nigeria had, and one of the most active angel networks now. And that really took off. Well, then we also did another thing. So because while that was getting off, it took some time to get off, because the people you had in our network were a lot of corporate executives, and they were used to the very structured way of doing things. So every quarter, they would invite the startups from our hub and other hubs to come pitch them, and they would ask for this data and that data. And so it was this long processes. And in the process, startups were dying because they couldn't wait that long for this sort of processes. And so what then we decided to do was go the street way. I convinced Michael, there was another friend who colleagues on this call, Kevin Simons and Tunde Aziz, all of us were in Texas then, and said, you know what, let's take a risk. You all have 401ks, your retirement funds. Why don't we take a small chunk out of our retirement funds, right, and put it together and form an angel fund with this and start investing, right? Crazy thing to do in 2012, 2013.
So can I pause you really quick here? Because
yes.
I mean, there's just been so much in what you've just shared, just in the sense that a lot of this has been very organic growth, right? It started with an idea. You found a couple of people that had a like-minded idea, and we're like, let's actually start pulling together, some entrepreneurs and see how we can support them. And then you have international universities that are like, we want to come and support these entrepreneurs. So it sounded like this was really a gradual momentum building process. And I think what's really compelling about what you said is, you were trying to engage, as you said, uncles in investing. And then there's a little bit of an education process around, but here's how you can get some return, especially if you're already investing in real estate or oil and gas. And then coming into the US and getting, some people interested in kind of building an angel network. And so I think I just wanted to pause to kind of highlight like the gradual progression, that this isn't something that happened overnight. It's been kind of incremental growth. It's been a lot about relationships and bringing different people to the table. So, okay. So where you were at in the story is you just formed the Lagos Angel Network. I guess where does the story evolve from there? And then if you don't mind, this could be a step back or a parallel conversation. But then you also have Loftyinc Allied Partners. So if that comes later or now, where that fills into the story.
Okay, so let me step back a little bit. So 2009 and 2010, the first company we formed was Loftyinc Allied Partners. So that's the mother company, or the father company as they call it. Everything else has been a subsidiary. So even with innovation, then became a non-profit arm of Loftyinc to do XYZ. And the Angel Network became the angel wing of Loftyinc to do XYZ. And the funds that came later. So Loftyinc, and that's why most people probably don't know Loftyinc, but they know the foods, right? They know innovation, they know Idris Bello, they know Afropreneurs and stuff like that. And it's this that we're actually bringing the Loftyinc name and brand back into people's consciousnness. Because what we actually do with Loftyinc back then was stay in the background and push out. And again, that came from my Procter & Gamble days. A lot of people know P&G products. They use Always, they use Pampers, they use, all those stuff, but a lot of times they don't even know it's made by P&G, right? But they just love those products. And that was really the idea I brought in from the very beginning. I said, hey, let's push, let's do what's good and let people identify with what we do. And but right, we're at that point right now where we're actually building everything back to the Loftyinc products, right? But that was really the idea. So Loftyinc Allied Partners is the mother company, and everything else came out of that. All right. And so to go back to that story, so again, you're very right about the organic nature of these things, because even at that point in time when I was telling people to put money down, I didn't have clear roads on exit. I couldn't tell you your money's coming back in 2 years, 3 years. We were just learning, but we knew these things had to be done. We knew so I was part of an alliance called the Arambians Alliance, which is a network of African entrepreneurs. Mm-hmm. One of the things we say is, if not us, then who? If not now, then when? Right, and that was the idea. So we need to just take this on, and we were at that point in our careers where we had those networks, we had the wherewithal, and we thought we could take it on. And we like one of my friends in Yaboiji, who later became one of our entrepreneurs, would say, we are stubborn on the vision, but flexible on the details. And that was really the thing for us. We knew where we were going. We didn't have to get there, and we're willing to just test and see and learn from our failures. And it also helped that all of us had been entrepreneurs in one way or the other and had failed at some point, right? So even at business school, myself and Kevin and some other folks had launched libraries across Africa to establish libraries across the continent, and we had failed in some. So we had learnings from all of these things, and the idea was, how do we go from here? So, but fast forward again, 2012, we're there. Lagos Angel Network is created. It's doing its own, structured stuff. Then I say, you know what, how can we do this faster? How can we ensure more companies are not dying before we put in the tickets in there? So I convinced 4 people. So it's myself, it's Michael Oluwagbemi, it's Kevin Simons, it's Tunde Aziz, and say, you know what, I don't know how you tell your wives or your significant others, but you're going to go to your 401k, pay the tax penalty, the early withdrawal penalty, and you're going to give me some, and I'm going to hand over that money. And I don't know how that money is going to come back to you, but we're doing this. And I really, really thank them for their faith. Yeah. I can say I will turn those monies back to them at least 70x to each of those 4 people. Why that initial money? But I'm very, very grateful for their support and for their belief in those early years, because yeah. So, but that was really what we did, and we formed something called the Afropreneurs Angel, right? And that was just 4 of us, and the idea was, we found startups that we believed in, we'll put in the tickets there. It's going to be small tickets, maybe around $10,000, but we'll do it as a single ticket. We will also pitch in to help them. So it's not just about the funding. So we become the extended member team for them.
Can I pause you really quickly here? So there was the Lagos Angels Network, but you all then started something that was a little bit more insular to then say, like, we have our own capital. We're going to invest in what we want as a group. This money is literally coming from our 401ks. And so, okay, so just to kind of
because the Angel Network was being on again. Under our support, Wally was attending on our behalf, but it was slower. It was not, because again we tried to go with build a large band of people, right? So the different interests, different concerns, education has to be done, and Tommy Davis was doing a great job doing that. But we realized that was going to take time to move people from the mentality of all the deals they were used to. And a lot of these people were corporate executives, where they had to see 3 years worth of financial data before investing, right? They had to do this, and they had to ask this and these questions. And we quickly realized that wasn't going to fly. But we realized that eventually it was a needed thing. So while Tommy and a few other people wanted this and doing good work with that, so you know what, someone has to take, and it's easier to deal with a small group of people who trust each other and with your own funds. Like, if you lose those funds, you're blaming yourself, right? So it's not other people's money, right? And that was really it for us. And that was literally what we did, and said, okay, put that money together. And we said, okay, fine. What we'll do is we'll do it on a deal by deal basis. We'll find the deals, we'll diligence the deals. And then again, when we say diligence, there wasn't really much diligence beyond the founder, right? And the idea. And they will put in those small tickets, but we'll be hands-on, right? And bring in our own support. And we started doing that. So late 2012 was probably when we wrote our first ticket. Okay. And by 2013, one of the key turning points was when the investment we made in what became Andela. And a backstory to that, and I'm revealing a lot of things I just went into the book, but that's fine. So like I mentioned, I had joined Fora. Again, mind you, this time we're all still having our individual lives going on. So Michael was still moved from ExxonMobil to Wally Parsons. Kevin was at Chevron, Tunde was at IBM. I had finished my MBA, and rather than going back to Chevron, I got a scholarship to go to the University of Oxford for a master's in global health. Because of the work I had been doing with a professor around health technologies, it got me interested in healthcare. I started a company myself, Afia Zima, with another guy, and that led to me going to the University of Oxford for 1 year for a master's, and then working with the Clinton Foundation in Swaziland and MTN around the healthcare around that. Again, and all this was going
all at the same time.
Yes, the same time, exactly. So we're juggling, and there was a 4-hour nights that we're sleeping, right? Juggling all this. I was doing a lot of travel. I was at Oxford. I was part of the Student Union government of Oxford. I was president of the African Society. I was spending more time outside of class than in class, right? Well, it was all going on, and we had innovation running on. We had the fund, the angel investment going on, and stuff like that. So by 2013, around that time, so like I said earlier, I joined the Arambians network, which was really the like-minded founders and entrepreneurs. And one of the young people I had met then there was a young man called Inyaboyeji, who was 19 at that time. He was in his last year at Waterloo in Canada. And he was bouncing ideas off me, right? And we'll be talking different ideas he was working on. He was working on something called Bookneto. Then his next thing was Cheetah. And then finally he found something called Fora. And said, okay, what do you think about this? And again, was advising him, and and then finally, July 2013, I think was probably his first Nigerian check or second check, and I think his first check was from Pule of CRA Ventures now. But we wrote him a check for funny story here. So we wrote him a check for $20,000, which was actually outsized. And then we developed code. So two things happened. The same day, another entrepreneur from our hub reached out to us and was needed funding. And so we said, you know what, maybe it makes sense to diversify our risk. Instead of putting 20K in this singular investment, which was for, why don't we just split the check, right? Again, 20K came from the for us, right? And so, okay, we'll split the check, and and so we asked him to return the initial documents and change it from 20K to 10K, and we put 10K, so we now split it 10K in Fora and 10K in the other guy. That's probably one of the greatest investment mistakes we ever made, because that's an error, a mistake. Again, in hindsight, that's probably cost over $1 million.
Wow.
Yes. So, anyways,
can I just ask you though? Does that experience inform? Because we'll get into this a little bit later, but a lot of the strategy is kind of like very small checks across the board. And kind of whoever is continuing to do well, you kind of compound your investment to then kind of avoid dilution. So would you say that moment informed your strategy of maybe we should actually be taking lots of small bets?
Yeah, it is. It makes sense, right? Again, because at the very pre-seed stage, there's only so much information you have, right? Beyond the founder and some gut feel and some experience, right? And so financially, it makes sense to do a small ticket until you have more traction and then double down big time, right? But of course, that can also mean it can mean on a very good deal. It could mean a huge multiple differential, right? Right, in terms. But again, it just makes sense. But anyway, so that's we wrote that check in 2013 July, and that was probably check number 5. Okay. As we speak, we're probably on check number 97 or so, right? So we've gone a long way from check 5 to probably check 97 now. But again, that was 2013, right? And we wrote that check, and then met a couple of other folks there, people like Yvonne Johnson, Yemi Ajao, right? I started working with Fora and in trying to get this done. He returned to Nigeria, started building this and getting it going, but it was tough, right? And Fora got to the point where a lot of people talk about the Andela story today, but what became Andela almost died, right? Got to the point where it was against many factors, the interface was struggling with end use, the licensing with the regulatory agency in Nigeria, who were considering him a university, even though it was not a university. And so all those issues were going on. Then raising capital was tough also, right? It's very different from now when the capital is flowing in. He couldn't raise the capital that was needed to move to the next level. And it was struggling. We still kept on doing other investment, but again, we're also working closely with Ian and stuff like that. And it got to a point where late 2013, 2014, Fora was struggling. right? And he was thinking of what next to do. How do you spend this? And I think it was around this time he met with Jeremy Johnson, who had just left to you. To you, which is a Canadian in that space, and he had been speaking to him about him coming as an advisor. Now there was the first. Hello.
Yeah, you're breaking up a little bit.
Can you hear me?
Yeah, we can hear you better now.
Okay. Okay. So I don't know. Maybe something in the network. So again, yeah, and I know I'm digressing a little bit to the Andela story now. But again, but what happened then was then discussions led to discussions, and FOA basically became part of the foundation for what became Andela. And then our angel group decided to now double down again, right? So we now double down on we had invested in FOA, we now double down on Andela in the friends and family round, and then furthermore after that. But then as we were doing that, we're growing the network. So at that point in time, I think there was no longer 4 of us. So by 2014, a couple of other friends who had gotten interested were also, especially when we were doing the Andela follow on, I spoke to a couple of other friends, to very close-knit friends, and said, fine, we have been in this investment for a while. We see it doing well. We've done all these other ones, but would you be interested in joining us to do this? And again, so seems same method too. We kept, we gathered some funds and put in money into what became Andela, and we kept on doing other investments. But I think the major turning point after the Andela one will probably be 2016.
Okay.
Right. And so which is why when I look at the tech investing space, I usually group it from 2010 to 2015, 2016 to 2020, and then post 2020, which is where we are now. Because again, there were pivotal moments that happened in 2016, and some pivotal moments that happened also in 2020. So 2016, a couple of things happened. For us, one, we moved back. So I had said, as most of the partners were in the US. By 2015, Michael and I made a decision to resign fully from whatever we're doing and come go on Loftyinc fully, and this angel fund and the other innovation hub and everything, right? So part of our back from Houston, and Michael moved to Abuja. I went to Lagos, right? And that was a very important decision we had to make. And say, okay, fine, we've done this part-time for 5 years. I think there's something in this, and I think we built enough of the on-the-ground support and know-how to do this. So that was one key thing for us. The other thing that also happened in 2016 was early 2016. By this time, Andela was growing, right? So it was well known on the continent. And in 2016, they had a Series B when Mark Zuckerberg invested. Right. And so I usually like to describe the tech scene and say there was just the same way you say, talking about the calendar, you say there was BC and AD. I would say there was BM and AM. And the M here is Mark Zuckerberg. So there was before Mark and after Mark, because a lot of things happened then. Yeah. When Mark invested in Andela and actually visited Lagos and was walking on the streets of Yaba, something changed, something flipped in people's minds. Yeah. And all people who had only seen the risk started seeing something beyond the risk, started seeing the reward. Yeah. Even at a personal level, in 2015, when I had moved back, my parents questioned my move back and were like, not only are you moving back from the US to Nigeria, which is crazy, it's only usually this way, then if you're not coming back to work for ExxonMobil or any of these big firms, you say you're doing this start of investing and this Loftyinc stuff. Are you sure everything is okay, right? And so in 2016, when Mark invested, I basically could say, you know what, Dad, Mom, Dad, you know, that Facebook you're always on, right? Greeting your friends. The guy who owns that Facebook just invested in our company. So they connected with that, right? So that was one. Then also we started getting a lot of calls from a lot of both local investors and foreign investors saying, what's happening in that tech scene, right? What's going on? We're interested and stuff like that. But the funny thing was that news also overshadowed something else that was happening. And that's what I see in the ecosystem. A lot of people see the buzz, but they miss the quiet things that happen underneath. Because while that was going on, this Flutterwave seed was being planted. But around the same time that Inyabueji and GP and the third partner were coming together to say we're seeing this payment opportunity on the continent, and we think we can build a solution to it. And I had a discussion with them right then. And I tried to bring in a couple of friends then. But some of those friends were annoyed and said, you didn't just get us into Andela. It's Andela we want to get into. And I'm like, you already missed the Andela bus. This is another boss. Like, join us on this boss, but people like the hype, where Andela was, and they couldn't figure out. So I went in with a couple of angels. I think at that point in time, we're probably about close to 10 into Flutterwave. So we wrote some of the early checks, Flutterwave. Now, Flutterwave then was at a $2.5 million valuation, which sounds so crazy when you think of it being a unicorn, 5 years later, right? Or less than 5 years later. But again, yeah. But from day one, even the first deck was very clear on the size of the problem they were solving. And that's one of the things I tell entrepreneurs, right? You don't know how big the market will eventually be, but again, how big is the size of the problem? How painful is what you are solving, right? How big is the problem, the pain point, right? And why are you particularly qualified to solve this? And I think that was what we saw very clearly from the beginning with Flutterwave. There was a very painful payment problem. The team, including Inu, Andela, and GB, who was coming from PayPal, Standard Bank, and Stanley stuff, had the qualifications, and they were ready to go at it. And so it was a no-brainer. We got what then was our biggest check of $35,000 into Flutterwave. Yeah, you want to say something?
Yeah. So no, I think maybe I'll kind of aggregate that, and then I'll input a little bit of what I know about kind of the fund, just because I want to be mindful of time and being able to get to some of the additional exciting things, and also letting folks ask some questions. But I guess what I'm hearing you say is, even with the investment in Andela and all of the hype that was going around that, well, I guess that being a big signal for the ecosystem and saying like, hey, I think for a lot of LPs or high net worth individuals or corporate executives, like that was kind of a signal to them, like, hey, actually what you're doing here, there's something of interest. Let me actually see how I can get, financially involved, which from my understanding is kind of how this kind of angel network grew. And if I can kind of jump ahead a little bit, my understanding is that the angel network now is about 150 corporate executives, I would say international and local on the continent, which has kind of become this advisory group. Because I think what I'd like to ask a little bit is, there are Andelas and there's the Flutterwaves, but how are you due diligencing a lot of the companies that are coming that you're seeing? Because I think one of the biggest issues ends up being, especially for foreign investors, is what's the market research? How do we actually understand what's happening on the ground and within the market? So could you speak a little bit about how you're leveraging the angel network to do some of the due diligence?
Yes, I was talking about that, and then I will actually led to us now doing formal funds. Because one other thing, talking about 2016, one other thing that happened was, like Marsha, I told you we had known Marsha in 2009, and she had been an advisor to the Loftyinc family, but she was not an investor in all our angel stuff. But 2016, when she saw that Mark invested, she was like, I'm so close to you guys, and I'm missing out on this. Why don't we set up a VC fund to do this? And our first response was, we're not venture capital guys. We're not investment bankers. We just love entrepreneurs. We love to support them and write checks out to them. All the other stuff, fundraising, fund management, it's not, cup of tea. And she was like, you know what, I'm going to come out of retirement and do this. I'm also going to write you a huge personal check, which you did, right, to get the fund started. And that was really what became our first VC fund, which we now called Fund 2, because our angel fund then became Fund 1, and then our VC fund became Fund 2. And then, well, first we're going to raise Fund 3. But going back to your question, so again, going back to the organic growth, what we then saw was that over time, as we invested, what would happen is this: if we're looking at a sector, one of the good things that worked for me is I have a very expansive network I built through my schooling years and all through. And so I would reach out to them and say, I'm looking at this startup in this particular sector, right? What do you know about this sector? So I go find someone in that sector in my network who knows the stuff. And in the process of them checking on, giving us feedback, they ask and say, well, you guys are investing. Can I join you? Can I be part of this? I'm like, okay, you know what? You're welcome, right? And that was how. So they were coming in with the value add. So that was good. So we're not going out and asking for angels, right, or investors. No. So it was really us going to, okay, fine, we're doing something, and we'll go to the MD of Accenture, for instance, Nigeria, then Neil Yusuf, and say, we're looking at this. Again, there's no market with that, but you're at Accenture, you see so many companies, so you see so many sectors every year. What do you see about the potential of this? And I say, you know what? In some of our previous reports, we look at this sector, but it's going to need this, or if they could do this and this in my skill. I say, yeah, Okay, that's good enough for us to write the first check. And then he says, you know what, can I join you? Yeah, you're welcome. And then he joins us, right? And the next time we're doing an FMCG stuff, and we talk to someone at Procter & Gamble or Coca-Cola, right? And in the process, they join us. And that's really how we grew from that 10 to where it's now 150. So it's value adding senior executives, male and female, both at home and in the continent and in diaspora, right? And to the point where there are very few companies or sectors now where we don't have someone within the network that knows the space very well. And that does a couple of things for them. One, like you said, when it comes to due diligence in the early stage, you don't have years of records. And so a lot of time it's social engineering that you're using. Who knows this guy? Again, at the end of the first thing is the founder. Why them, right? Who knows the founding team? And there's always someone in the network who knows a cousin, who knows an angry ex, right? Who knows someone. It's crazy the way these things are worked, right? And so so you're able to piece together some kind of personal, kind of info about the founders, right? And then where have they worked previously? What have they done? What schools? Who knows them? What have they dealt with? And you piece that together. And then also about the sectors and about different things. And that's really what we have built. And now it's almost like we do it like this because again we built it over time, and it's almost become like a key differentiator for us, which we are now leverage into the main fund, because now with the main fund only does seed, it doesn't do pre-seed. But a lot of times the angels have also looked at a lot of these companies in the pre-seed, they due diligence them, and they have enough insights, enough info, which then feeds into the main fund. So in one way or the other, we've created our own, in quote, McKinsey or two people, right? Across sectors, across the continent, who are able to diligence, but then who are also able to provide value add to those companies in their first 2-3 years of life. Because then after we business and a license from EcoBank, and we have someone in the ecosystem, our ecosystem who works or knows someone at EcoBank, and we're able to call them and say, can you partner with us? And again, it's gone both ways.
What's the minimum check size for the angel syndicate?
So it's weird, and again, and this is, when I say this, the angel minimum we do is $1,000, which is small, right? But it's not open. That's the thing, right? So you can't just write and get in, right? So it's almost like a referral. Exactly. So it's a click, right? So it's almost like a referral thing, right? Where an existing angel, saying, you know what, this person brings so much value, and we or should take them. So again, if we wanted to go to 1,000 people, we probably would have done with that small size. But for us, it's really more about the value add than the ticket that we're writing, because that $1,000 carries a lot of weight, right? A lot of advice, a lot of support, and then it's also about Africans also investing in Africans, right? Again, and so we've got a very close-knit stuff, and I don't think we're going to open it up. And that's why we can keep it small. Otherwise, once you start opening up, they have to raise the money so that they can, limit it and stuff like that. So we're more about the quality and less about the quantity for us. Yeah.
I think what's really
and the interesting thing now is that most of those angels are now going to become LPs in the main funds. So the way it now works is this: so they put their big checks in the main fund, and which is diversified, but then they're in the angel group, which allows them to almost like contact sports. They have a feel of what's going on in the ecosystem. They see the deals, we see the help review, the due diligence and stuff like that, and they take some early personal bets. But then, if for the ones that do very well, they also have money in the main fund that then takes the big bets with traction.
So just to recap on the angel fund, I think in addition to the network being kind of who you're leveraging for the due diligence of a lot of these early stage funds or companies, because my understanding of the angel syndicate is at that point you're investing in a founder and a deck. So you're due diligencing the person, and then you're getting some understanding of like what's happening in this market. Do we see this being an opportunity? Can this person drive this forward? And then what you're also getting out of that is you have 150 people who are in different industries, so they can bring potential clients and customers to the entrepreneur that then, as the company grows, the main fund can then decide, okay, we'd like to either invest or not. So yeah, maybe can you talk a little bit about the fund 2 and kind of how that came to be and the types of companies that you're looking for?
Okay, so then what then happened was, so with Marsha said, okay, why don't you do a VC fund? And so we went through all the painful parts of setting up a VC fund, and it's very different from what we're doing, because what we were doing was really spending time entrepreneurs who love funds. So that one, you have to go ask people for money, right? And we made a mistake in quote of talking to the DFIs, the big institutions, and they have these long archaic processes of 18 to so funds take 4 years to raise money, right? Which is so crazy, right? Because they raise money from these big institutions that have these long processes, long reports, and stuff like that. I was spent between 2017 and 2020 flying from Luxembourg to everywhere, talking to them. And it was so fun. And again, I'm being quite transparent on these things. And so we went to them and they said, how much are you raising? And we said, you know what, there's a small fund, so probably raise about $3 to $5 million. It's not, that's so small. We only write $5 million or $10 million checks, and it can be more than 10% of your fund. So raise it up. And so we did, okay, fine, okay, let's raise it up. And we'll get to the point where you say, okay, probably raise $30 million or $60 million. Like, wow, what do you want to do with all that money? Like, what have you done before? Why would we give you this? You have a VC background, no investment background. And then this was pre-COVID, right? So we're having to fly to Luxembourg, fly this and spend our money. And it was just unsustainable. So we just got to the point where we say, you know what, we're not wasting our time. These folks do not understand the space we play with. These spaces are not where you need these checks very early on. It's more the small checks and the support to grow them. And we also, and the speed, because in 3 months, that idea could die, that company could die. So you don't have the 6 months to wait for all these due diligence processes, right? It's really about de-risking it with small tickets and then staying close to them. So we stopped there and said, you know what, we're going to face individual LPs. So fund 2 ended up with just a small fund, a little bit over $1 million, which we then plowed into 6 companies, right? So Pointivo, ePump, Flutterwave, Shift, U-Verify, and Reliance HMO, Canco Reliance HMO, fully deployed. Fast forward, and most of that money came from that we knew and include them. And the fast forward,
you're breaking up again a little bit, Idris.
Forced exits. Yes. See what's going on.
Did we lose you? Oh, nope.
Hello?
Okay, yeah, you're back.
Hello, is he back? Yeah, thank you. So fast forward, so again, I was saying, so it was a small fund, but again, because we are not investment bankers, so for us, it was not about, you know, a lot of times why people don't raise small funds is because of the economics of it, right? You have to pay good salaries to the funds, you have to do all these things. But we were scrappy entrepreneurs, right? We've done this for years, building this, even there was no fund. So we knew why we were doing this, and that was key. What we need to do is to ensure that the flow of capital to entrepreneurs. And we're not going to spend 4 or 5 years running around trying to build a big fund to do this. So what we ended up doing was this: we raised a small fund, which we call Fund 2, but we get under the angel stuff, right? So because we had built that network, we acquired those small tickets, and then we now use the big fund to do the bigger tickets. So take a Flutterwave, we went in with the angel group and put in $35,000 at a $2.5 million valuation. Fast forward a year later, they are doing a pre-series A at a $34 million valuation, and they will write a check for $250K bought from the fund.
Yeah.
Again, that was what we did. With same thing with ePump, same thing with Pointivo and a few other ones. And that was really how we fully deployed that fund. And again, fast forward this year, the Flutterwave becomes a unicorn, and then the fund is able to exit at a 15x multiple of what it went in, and we were able to return about 3x of the total investment to LPs in less than 4 years, which actually made them very happy, right?
Mm-hmm.
Again, especially for a small fund, and again, it proved our thesis, right? And again, of find them early, support them through the angel network, help them grow, double down on the good ones with bigger ticket sizes, and then find a way of exiting when the ovation is loud to the bigger institutions who come in and want to take it further to IPO, return money to your LPs, and then just do that over and over again and give. Because the idea is you have to have people, everybody's always waiting at the end point. They're waiting for the Flutterwaves, right? The well-known stuff. But someone has to plant those seeds. You have to be able to invest in hundreds of companies at the early point in the pipeline to create a lot of them that then flow later to the pipeline, where you can have the big fund. And that's really where we add the most value.
Can you talk a little bit about your exit philosophy? Because I think it's been one of the more unique strategies that I've heard, which is you're going in early, but you're also trying to get out early. You're not going to ride you're not intending to ride out the flutter wave out till IPO or, until, Series D or E. You're like, let's get in and let's get out. Can you talk a little bit about why that is?
Yes.
Strategy is
So,
that?
so we tell our investment, we are with you for life in support, but we might not be with you for life in their investment, right? So even if we exit Flutter Wave, I'm still getting on call with GB, I'm still getting on call with the team, we're still providing support because we are part of them. It's like your baby, right? They graduate and leave your house, right? But they're still your baby for life, right? And that's our stay friends and support for life. But one of the things we quickly figured out was this. When you go to people that you want to invest very early on, the question they ask is, where are the exits? And we have this several, especially on the continent, where are the exits? There are very few IPOs, very few M&As. And so that's the question they ask. So the question is now, how do you ensure there are more people willing to fund the early stage? And our answer is, you have to ensure they are liquid. You have to give them liquidity. Now, if you're going to wait for 10, 12 years for IPO, you are starving them of liquidity. And so the idea was, can you focus on where you play, which is you come in very early, it's higher risk, but 5, 6, 7 years into that stuff, there is liquidity because there are a lot of bigger investors who want to come in, right, and offer you the smaller ones liquidity, which you can then return back to your LPs or your investors, and then they can recycle that, right, into the early stage. Why that doesn't happen a lot is because there's still so much on the table, right? So take a Flutter Wave. Again, very bullish on Flutter Wave. Flutter Wave is still going to become a $10 billion, $20 billion company. I have no doubt about that. Amazing stuff. And so from an investor lens only, you could say, you know what? Am I not leaving too much on the table, right? Why am I exiting now? Why don't I ride it all to the end? And that's why a lot of people stay up to the end and stay for 10, 12 years. But we figured out our job, where we add the most value, is in the first couple of years of these companies. And what we can do best, what very few people can do as well as we can do, is grow more of them. To do that, we have to double down on that early stage. We have to find a way to exit, and we have to find a way to pump more money back into that early stage and create more. So yes, we might lose on the upside of the later stage, but we gain it on the quantity of big companies we're going to be able to create very early on. And so we structured our own exits where we have this huge pipeline of later stage investors who now trust us, right, and trust our value adding process, and are waiting for us 4 or 5 years into our companies to buy us out, and then we can just replicate that. It's strange, it's not whatever, but again, like I said, we're not doing it by the book, folks. We didn't go to school for venture capital, so we learn from what works. We understand this continent, we understand our space, and we just do what works and learn, and then we find as we go.
But it's brilliant because one, you're creating your own exits, and then two, then you're offering to your LPs success. And so even if I think this is what happened to you all, is that you exited from Flutterwave, and then they were like, fantastic, we'll take 10% out, keep running, and find some additional companies, which then kind of builds that LP confidence, which then is kind of the ripple effect that I think is needed for the ecosystem. Because I think a lot of fund strategies is like, let's double down, let's keep doubling down and try and write it out and just kind of get this massive chunk at your larger exit. But this approach seems like it's much more fitting for, I guess, the stage of the investment ecosystem on the continent at this point.
Exactly, because we think the idea is you need to have more, especially Africans, right? More Africans playing at the table in the investment space. Because, and I said this, because if you don't have that, if most of the capital is just from outside, when there are those exits, it's going to go back outside. And so the way you can do is offer them, get more liquidity to these people, and we get more liquidity, they invest more. Not just that, they also become, but spread the news, right? And so each LP who has gotten money back then tells their equally high net individuals to say, we've invested with the Afropreneurs, with Loftyinc, we've gotten their capital, we trust them, we support them, and then bring more people. And so, like we say, it takes a village to raise a child. And that's what we're trying to do. We're trying to build a village around of investing around these startups on the continent, and we think the way to do it is this quick turnaround and creating more. And again, this will evolve over time. You'll see folks who want to stay longer, and again, we have solutions where some of the folks have been talking to us and say, okay, fine. Even when you return, whereby if you want to stay longer, we could have SPVs for people who want to stay longer and stuff like that. But again, I think it's about there's no one size fits all in this ecosystem. People just sometimes want to import something that works elsewhere and plug it in here. But because we are first entrepreneurs ourselves and operators ourselves, and we're on the ground, we're able to this out. One other thing I've also not spoken about, which is also something that I'm very excited about, is our So a lot of times people talk about when talking about African investing, there's so much focus on Nigeria, and that is great. I'm from Nigeria. But 5 years ago, I figured out that beyond Nigeria, one other key country was Egypt, right? And so started investing in Egypt about 4 years ago from the angel side, and spent a lot of time there building up the ecosystem, supporting a lot of the early stuff there. And so it's interesting now in 2021, now see a lot of funds start looking at Egypt, right, which we have been in for the past 4 years. And because you also see very similar characteristics with, for instance, between Cairo and Lagos, in terms of the young population, in terms of what they're trying to do, in terms of government support, in terms of the infrastructure, in terms of the talent they have there. And you see this with even companies like Andela, right? At the point they have to expand to Egypt for the talent there. And we've seen this, and for our next fund, particularly, it's one country we're very bullish about. I know people talk about Nigeria a lot, but I think you're going to see a lot of investment in our fund 3 actually happening in Egypt here.
And it's, I mean, from our earlier conversations, one of the things that you mentioned was, in Nigeria, a lot of your early work was really building the infrastructure around, the investments so that, so there was some kind of support network. Whereas, in countries like Egypt, there's a lot more investment that's happening in creating and enabling startup ecosystems. And especially, I think there's 2 funds in the last, I think it was a month or 2, that between the 2 of them are $150 million of capital. So there's a lot of capital coming in because kind of among many reasons, but because there's kind of this infrastructure and kind of regulatory support, it's enabling all of this growth.
I think that's something I must commend the Egyptian government for the FRA and they've been very supportive of the investment ecosystem there with the public policies and the regulation. I think that's something Nigeria could actually learn from, right? In terms of the support, for the ecosystem. And so you also see, again, Egypt is very dated. So you see a lot of local angels, right? So there's been a lot of local investment. So in Egypt, the first 2-3 rounds, you can easily raise it locally without even foreign money coming in, right? So, and again, you've seen with Algebra, right? And then with Sawari Fund and a couple of other funds, the Cairo Angels. So over the years, they built that ecosystem of local support. And I think the world is just focusing on it right now. And for them, they also have access to the GCC area, the access to Europe. And of course, increasingly, I'm also bringing a lot of them to also looking at sub-Saharan Africa as a market, because I think there are a lot of opportunities there. But you're right. So there's that infrastructure that already exists, and then you can tap it into in Egypt. Of course, there's a language barrier. It helps that I speak Arabic, right? So was that language barrier for a lot of time between sub-Saharan Africa and North Africa. But I think with a fund like ours, I think we straddle both, and we see the opportunities across both ecosystems. And over time, I think that's also going to grow.
Absolutely. And yeah, so we are at time. I know many folks will probably have to drop off at the top of the hour. Idris, if you have a couple of minutes just to take some questions from the audience, I'd love to kind of give an opportunity to open up the space. So feel free, folks, to drop some questions into the Q&A. And there's a couple here that I'll just kick off with. So one of the questions was around the angel network is when you bring on a new angel, is there a training session that you do for them? I guess, how are you kind of upskilling folks on, how to go about doing angel investments?
Yeah, firstly, like I said, the angel group is not open, right? So yes, it's by referral. So you have to know one of my Disney angels, wooden vouchers, and stuff like that. But what usually happens is this. So over time, we've built a couple of things around some materials. We've done a couple of videos that I've put together, understanding the angel framework, and some books. And so when the angels come in, that's the first thing, right? So they come in and they have to go through the videos and the learnings and the books and stuff like that. And then they join us. And even when they join us, the first couple of deals, they're actually looking, right? Observing, right? Because the way it works is this, and this is true secret we build here. We have out of the 150 angels, we have about 10 of them who spend probably about 6-7 hours every day on this. And this is not their full-time job. these are very senior level folks, right? And I think I should call some of them out here. Amazing people. People like Yvonne Johnson, who runs Indochina, right? So people like Yemi Ajao, people like Nei Yusuf, Veraki, formerly Accenture, people like Shini Sulaiman, formerly Andela, top folks are people like Matida, who was with Avala Capital in Berlin. So top folks, right? So in different spheres. And so what usually happens is I probably see about 30 decks per day, and that's not exaggerating, right? So you should see my inbox, right? And then those where it's a quick no thank you doesn't fit in, but the ones that fit in, we're sharing with the Angel group and we're reviewing through our Slack. As okay, we need to have follow-on calls with this. We need to dig deeper. We need to look at this industry. They mentioned these 3 clients. We know them personally. Let's confirm and say, okay, are they truly clients and what's been their experience, right? So we building all that within the Angel group, and once then we go forward with a call, we're having calls with them for that due diligence negotiating, and then so that 10-man group, 10-man woman group does that before we now bring it to the larger angels and say, okay, fine. Out of the 100 deals we've seen in the past 2-3 weeks, these are the 3, right, that we think it's interesting enough that we think we're committing to. So what do you think about that? And people opt in, opt out.
Yeah.
Right, so there's no way that you have to do anything, right? So again, but at the very least, you've seen, and you've seen our process, you've seen our investment memos. So a lot of people, for them, even education to start with, right? Getting their feet wet and stuff like that. And we've seen that a year, 2 years later, they're talking about putting more money in the fund and stuff like that, and doing more and adding value, right? So for us, it's really been more of building an ecosystem. I think that's really building an ecosystem, which then helps, because one of the challenges you're going to have with African startups is the absence of talent at managerial levels. Right? As they grow, as we have more and more flutter waves, where do you find the talent at that level? I would think it's going to come from the existing corporate sectors. But how do you get them involved? You can't just take them from day one of being a KPMG and throw them the startup. It's very different. And so we think by several of them getting involved in this process of angel investing, of advisory, so they get a feel for it. So naturally, as those companies grow and they're looking for senior talent, you see them start moving in that direction, right? And we've actually seen this. We've seen this even from the oil and gas industry. Some of our angels who are retiring from that industry are now becoming senior advisors or management for some of our startups, right? And that's really what we want to build. Again, it's a gradual process. It's not obvious now, but give it another 10 years, you're going to see that flow happening. And I think that's really what we're really focused on, which is why I said it. Which is one of the reasons why the Angel Group is not really open, because it's really not about money for us, right? But it's really about that building that talent, building that interest that supports those companies and goes there.
It's almost like applied learning, where you're learning about opportunities in early stage companies by investing, and then that's kind of like catches your interest. Maybe you actually go start your own company. Maybe you join one as an advisor. Maybe you're joining as a team member. So it's like learning by exposure. Another question that came up was, this is kind of a general one. If there are any African angel investor groups in the United States that you know, if for people that are interested in, checking them out.
Yeah, so I would put my email there in the chat section and send me an email. Even if we don't accept you can always refer it to people or answer any questions that you have. Yeah, so let me see.
And that's something, if you want to share with me, we can kind of do a blast to all of the attendees.
Yeah, exactly, you can do that. Yeah. So
maybe one last question. What is the regulatory environment for investor participation, accredited investors, active versus passive role in fund decisions?
Yeah, so which is why you probably would hear me say a lot of things about our Fund 3 here, which is actively raising, because we're not allowed to solicit. Our Fund 3 is $10 million and it's already 70% committed. And so, but I can't say that much here. So you can always check our website, and people in our network know how to reach me, but it's almost closed, right? So, but so we're a US investment firm, right? So a management company fund itself. So which means we are a series, say that 506B, we can solicit. We would accept mostly accredited investors. That means investors who have at least $1 million in net worth or earn about $200,000 per annum for US investors. So that cuts out a lot of people, right? I know. But then we also work with our lawyers, we're leveraging Fully, right? Fully.com. And so what we're doing is we have the Reg D regulation, I think the regulation D or regulation S, which allows us to have a feeder fund for foreign investors, some of whom will not be accredited. And so that's the vehicle that allows us to bring in a couple of foreign investors and non-US investors that we're interested in. So we have a foreign vehicle that allows a couple of non-accredited investors to come on. So, but again, once we chat, for those who know us, can always answer those particular questions. But generally, the fund is for accredited investors, but we're able to bring in some non-accredited investors or foreign investors through the feeder vehicle under the Reg S. I think that's what the lawyers call it. And our website, so it's simply Loftyinc Capital.vc, Loftyinc Capital.vc. You can always see more information about what we do and stuff like that on our website.
If I'll ask one more question, and then I'll ask how people can be in touch with you. But sorry, excuse me. Maybe as a closing question, what would you say is overstated about investing in Africa, and what would you say is understated?
Oh man, okay. So the way I will answer that question is this. So if I look at, I was saying the pivotal moment, 2016, I said was Andela, Flutter Wave, all starting a fund and stuff like that. 2020, I think was COVID. COVID changed a lot of things because one, it democratized access to capital for a lot of African startups. Previously, in the early days of Flutter Wave, if you need to raise from the Great Crops and Co. and the people in the valley, you would have to physically go spend a month or so in the US. Now with Zoom, you see foreign investors from Sequoia to everybody writing checks to African investors, African companies over Zoom. So that's really changed stuff. So it means you don't have gatekeepers anymore. Right. And capital is becoming a commodity. So the question is now, so for investors, the startups are almost asking, why should we choose you? It used to be you, the investors, asking the startups, why you? Now it's where the startups have so much capital access that they're now asking, why should we choose you as the investor, right? And so what we say is that when money capital becomes a commodity on the continent, what stands us out is usually our relationships and our reputation, really nicely. And so we also tell the founders, right? So the new founders ask about us from our existing portfolio companies, because that's really what we can vouch for you and things like that. And so the advice also for the founders is, yes, there's going to be so much capital, but I think you still need to be quite sensible about who you take money from and what you take, right? Again, because at the end of the day, it goes back to your revenues, it goes back to your traction, right? The raising the money and having those high valuations, which is happening right now, is going to happen over the next year or two, outside valuations that don't make sense, right? At the end of the day, you still have to justify those valuations, right? So I think that's the key thing for me, because it's a new period for us, for everybody, even at the later stages. You're seeing the Tiger Capital coming in and throwing out a lot of money. You've seen several deals, happening, and I think there's that flurry of, that's happening right now that everybody's trying to figure out, is this the here to stay? Is this here to go? Stuff like that. So that's one. Then the other thing I have is for foreign capital that's coming in. It's very important that you find people who can help your startups locally, right? Capital is not enough in the first 1, 2, 3 years of the company, right? And I know a lot of founders don't like to hear that, all we just need is the fund, right? But it's tough, right? Especially when you are working in economies like Nigeria, where the regulator can just wake up tomorrow and just flip the switch and something happens, right? So how do you manage through all of that, right? And I think finding the right investor, the right support for you as a founder is very key, even more than the money that you take, right? And then finally, for people who feel that they've missed out, I know people say, we missed out, where were we 5 years ago? It's still early days, we're just beginning, right? But focus on the planting, not the harvest. I think a lot of people get excited by all the nails out there. Find the deals. Find those who know the deals. Focus on the planting. And 2023, 2024, you'll be amazed. I can tell you are the kind of exits that will be happening in another 3 to 4 years. But the planting is being done now, and we invite you along for the journey.
I think those are great closing words. And in another conversation I had as well, that it was a reminder that, this is still very early days for early stage investing. And so it's really about how are you intentionally getting involved, and how do you find some education? How do you find the right partners? So Idris, thank you so much. I think we could honestly go for another hour easily.
Thank you, Alicia. Thank you.
And yeah, so thank you so much for sharing your expertise and your wisdom and your experience. Thank you to everybody that joined in, on Zoom, on Clubhouse. We have a couple folks listening in. If folks want to get in touch with you, you mentioned your website, but is there any way that you want people to reach out to you?
So website is there. I think that's the best way, because again, someone will always respond to you. If you send a personal email, I might not get back to you. I'm that overwhelmed. On the website, is a contact us, and we would ensure someone gets back to you. I also keep a blog where I share the foreign parts of this journey. It's not it's not regular, but again, if you go on that, you probably get a deep sense for where this journey, and I've kept it for the past 11 years now. So you kind of get a sense for where this is coming from. Even the early days of innovation, I was blogging there. So that kind of gives you a perspective for, we're not new to this. We've been doing this for years. But then also, so check my blog. It's afropreneur.com or idrisbello.com. You can check that. Then our website is Loftyinc Capital .vc, and you can always contact us there. And again, for those who send personal emails, I would eventually get to it, but again, it takes a while. Yeah. So, and of course, we're on LinkedIn, Loftyinc. We're also on Twitter and Instagram. So follow us, ask questions, and hopefully over the next couple of months we'll do more of this. I've been publicity shy, but I think what's it called? Lydia and the rest of the team are pushing us to do more and more education around this, so that more people get involved. So you can expect to see more and hear more about Loftyinc. But thank you very much for the interest to everybody here.
Yeah, absolutely. And we'll make the recording of this available. It'll be on YouTube, and just, of course, for you to share with your network. Some of the things that you mentioned, I'll include in the follow-up to guests, so they can have access to all of that. Yeah, thank you so much again. We will anxiously wait your book for whenever that comes out. And yeah, otherwise, thank you for doing what you do.
Thank you, Alicia. Thank you, everybody.
Bye.
Yeah. Bye.